Land Trust grew out of the civil rights movement in the U.S. The first community land trust was established 50 years ago, led by Slater King, cousin of Dr. Martin Luther King Jr. Douglas Community Land Trust builds on this legacy, the spirit of Frederick Douglass, and the work of more than 250 community land trusts in different regions throughout the country. Racial and economic justice center our mission. Douglas Community Land Trust is a membership organization. We invite you to join.
Welcome, everybody. We are going to start this presentation on insurance for co-ops and condos in just a moment. Thank you all for coming. And to officially kick things off and welcome everybody, I'm going to turn it over to Kaisha Davis, who is a founding board member of Douglas Community Land Trust and the chair of our, Kaisha, remind me of the chair.
Engagement committee
Thank you. I
chair.
apologize.
Thank you. Hello, everyone. My name is Kaisha Davis, and I'm with, as Adam just said, the Douglas Community Land Trust Engagement Committee chair. I thank everyone for coming out tonight. I'm super duper excited to have everyone on the line tonight, and thank you so much for attending. To start off, I want to introduce you to a little bit of Douglas Community Land Trust and what our mission and goals are, and what we're about. Racial and economic equity organization, preservation of affordable housing in its perpetuity. We provide stewardship services for co-ops and condos. Insurance is important for board members, for the board of housing, cooperatives and condos, in order to protect the building as well as the members. And I would like to thank Covenant for also being our presenters for tonight. And two of those members, Laura and Mary Louise, I would like to thank them for, again, presenting for us tonight. And so we have interpreters as well from Global, YNS, Laura, and Ryan. Thank you all for attending, and thank you so much for being a part of Douglas Community Land Trust. Adam.
Great. Thank you, Kaisha, and thank you for our work. And so without further ado, I'll turn it over to our experts from Covington on insurance. So Laura, Mary Louisa, take it away.
Hi, all. Thank you to Adam and Kaisha for that nice introduction. We'll just tell you a little bit about who we are, and then we'll start talking insurance with you. So my name's Maria Luisa Galazzi, but everybody calls me ML, and you're welcome to do that as well. I'm a partner in the law firm of Covington and Burling, which is its principal office is located in DC, but we're worldwide. I do a bunch of different insurance things and work closely with Laura on many of them. So we'll tell you about some of that different stuff, and have particular interest in the land trust community because I also help an organization that insures land trusts. So it's something that's near and dear to my heart. So I look forward to discussing that with you all. Laura, you're up.
Hi, everyone. I'm Laura Beth Cohen. I'm an associate here at Covington. I'm in the DC office. As ML said, I work on a variety of different insurance issues for a variety of different clients, and I'm really excited to be here and have the chance to speak to you all. And I hope that this presentation is helpful.
All right, so we'll go to our next slide. So this is a disclaimer, and we do this with every presentation because we're here to give you some background that may be useful to all of you. But our purpose is, and we certainly, at least I may express opinions that are just purely my own, so don't hold them against Covington or anyone else. if, for example, you were looking to us for legal advice, this is not that. So we are not being your lawyers in this conversation, but if you need legal advice, we are happy to provide it, but we'll do that sort of offline. This is really just a general educational purpose, and we have to explain this so that we're not creating a lawyer-client relationship with everybody who's talking to us. So that's the reason for this. And with that, we will kick off our presentation, and Laura will start us off.
Yeah, so we're going to cover sort of three main topics today, starting with insurance basics. Then we'll cover insurance claims and interacting with insurers. We'll discuss what insurance is, why you need it.
I'm so sorry not to interrupt you, but we're finding it very hard to hear you, Laura. So I don't know if you can get closer.
Laura, can you get closer?
Yes, let me figure out how to do that.
These multi-monitor desktops are very difficult sometimes. I know. I
Is
point my
this-
voice.
Sorry, is this better?
Very good.
Yeah, sounds better to me.
Oh, great, thank you. Sorry about that. To be honest, I'm not really sure how I fixed it, but great. So as I was saying, we'll cover different kinds of insurance. How do you know which ones to buy? How to make an insurance claim and how to interact with your insurer, as well as how to buy insurance. I will leave some time for questions at the end, but if you feel free to ask a question at any time, and we're more than happy to answer. And of course, don't hesitate to ask a question. Insurance can be very confusing. We do this all day, every day, and we still sometimes struggle to understand what an insurance policy we're looking at says. So don't be shy. So starting with insurance basics, what is insurance? Why do I need it? What are the different kinds of insurance and which ones do I need? And most importantly, what does my insurance policy say? So insurance is really a way to share risks. An insurance policy is a contract between you and an insurance company. It says that if you pay your insurance company a premium, then that insurance company will pay if certain things go wrong or bad things happen to you. So insurance policies can cover anything from damage to your property to a lawsuit against you or an injury to one of your employees. So the way insurance works is everyone in a large group of people pays a certain relatively small amount of money to the insurance company, and this is called a premium. Then when something goes wrong to only a few members of that group, the insurance company uses the combined premiums to help pay to fix whatever went wrong. So insurance can help make you whole after something has gone wrong, if there's property damage, for example, or a lawsuit. Of course, the most important thing with risk management is to try to prevent things from going wrong in the first place. Now, obviously, not everything is in your control. Some things like hail damage, for example, there's not much you can do to stop the weather. But if something is in your control, for example, a damaged staircase that someone could get injured on, it's good to make repairs proactively so that you don't need to use your insurance.
Well, and to follow on from Laura's point, I think one mistake that a lot of people make is thinking when something bad happens, and we'll talk about the different kinds of bad things, that I just go to my insurance and turn the switch on and it will respond. And, sadly, one of the things that keeps us in business is because we only represent what we call policyholders against the insurance companies, even though we need the insurance companies, but we like to be on the side of the angels for this. But they don't always pay, or they find a reason not to pay because of something maybe you did wrong in presenting your claim. And we'll talk a little bit about that. So it's not automatic. You have obligations, and we're going to come to that, and that your obligations under the insurance policy are very important. It's not just flick the switch and the insurance money will come. So we'll come back to that. So then the question is what kind of insurance we're talking about. And the very precise answer we're going to give you is it depends. And it really depends on what risks you face in your life or your business that you need some protection from. And so the way you evaluate, or your broker evaluates, and the broker, of course, is the person who helps you buy insurance, because this is a hard thing for anybody, any normal person to do. I mean, we're supposedly insurance expert and we use insurance brokers for our own use, so it's a thing. But you look around your life and see, or your business, and understand what kinds of risks you face. So there are risks to your building. There are risks if you drive a car. There are risks if you own or use a computer or a mobile device or anything like that. And you think about all of those risks when you design the kind of insurance you need. You may need more than one kind of insurance. So if you think about this, if you have health insurance, that's great, but it doesn't help you with your car, and it doesn't help you with a cyber attack. So when you're buying insurance, you are buying what I like to call a portfolio of insurance. There are a couple of things you might need to protect against the various risks that you face in your life or your business, and that's your portfolio. So we'll look at some examples of that and tell you a little bit about what they do, so you can start thinking about which of these types of insurance, and there are a bunch of types of insurance, are actually relevant to you and you might need. So one of them is property insurance, and that generally covers two things. First, it covers damage to your property, and using Laura's example of like when hail falls on the roof and there's damage to the roof, you want to, there's not a lot you can do to protect about that, except maybe having a good roof. But then you go to your insurance company and say, I have damage to my roof, come out and look at it and tell me how much you'll pay. It can also cover, there's property liability insurance, which is if someone comes onto your property and they fall down the stairs, they may sue you for that, or at least demand that you pay their hospital bills and things like that. So that's an example of where a third party is coming to you for money because that you might need to be insured for. A property insurance policy can also cover if you have a business, for instance, you've got a store and the store suffers fire damage. You need money to fix the fire damage, but you also need money for the amount of candy you were going to sell, but you can't sell because your store was damaged by fire. So it covers some of your income there as well. So those are big fat insurance policies, and they're kind of complicated. Auto insurance is kind of like property insurance, but it covers cars or vehicles instead of properties. So it will cover two different kinds of things. One is damage to your car, but it will also cover damage to somebody else's car or to some other person. So that's it. It covers, I guess this is a broader point to remember about insurance policies. You call them one thing like property or auto, but within each insurance policy, there are different pieces or different buckets of money that are available to you for a different set of related kind of risks. General liability insurance is usually, it's for third-party liability when somebody wants you to pay them money for something. It is typically bodily injury if you cause physical damage to someone, or if you cause damage to their property, like you are, playing, let's say you're playing in the street with a baseball bat and hitting baseballs, and one of them hits somebody else's window. So you have damaged somebody else's property. They are probably not going to be happy about that, and they will come and ask you for money. Directors and officers insurance is, and this will probably be of particular interest to this group, is when you have a group of people who are running the business, either as management or as on the board of advisors, directors, in some board capacity. And there is a claim that they did something wrong in running the business. So for example, if they were supposed to manage the investments of the business or manage the finances of the business in the right way, or to make sure there were no conflicts of interest when they have a relationship with a vendor. Then if somebody comes back and makes a claim against you and saying you ran this business the wrong way, then that you would look to your directors and officers coverage to protect you against that claim. A few more. Workers' comp is when you have an employee who is injured while doing their job. That's usually required by state law. Not all of these insurances are required by state law, but many of them are really a good and prudent risk management thing to do if you are running a business. Employer's liability is if your employees allege in a somewhat different way from workers' comp that you caused injury to them and were not properly protected, or you were reckless or fraudulent or something like that. Hopefully that doesn't apply to anybody here, but it's another level of insurance for injuries to employees. Cyber liability is becoming increasingly common, and it will cover your business for things that are, you know, computer, internet, other related. So if, for example, you get hacked or there's a ransom, sometimes if people sort of steal money out of bank accounts using, you know, electronic fraud, then this is probably a good type of insurance to have, although this piece of insurance can be folded into other kinds of insurance. So that's where it gets complicated, but we won't go down the road. But it will cover two different things. One is if you lose money, for example, you have ransomware against you and you have to pay the ransom, or you lose your data and you have to recreate it. It can also cover liability if, as a result of something bad happening to your computers or your mobile devices, etc., private information of employees or other people is released to the public, because that's money you might owe to the person whose private information was disclosed. So it covers two different things: your own loss and your liability to someone else for the disclosure of private information. Just two more. Oh, sorry, one more. Environmental liability, and I'm not sure how much this is going to apply to this group, but I'll mention it and we can come back to it, is if you do damage to the environment. So you discharge toxic waste, you have pollution, those kinds of things that are caused by your operation, sort of an oil spill. And the reason there is a separate insurance policy for that is that this kind of exposure is often taken out of property or general liability or directors and officers insurance. So you need a special place in your insurance portfolio to park it. So this is not I'm sorry to say, it's not a comprehensive list of every kind of insurance you could ever hope to have. There's insurance on planes, there's insurance on ships. There's, of course, health insurance that everybody is interested in. There's renter insurance and contents of a tenant's household, or life insurance. So all of those things are relevant. We'll probably focus on the ones that are most relevant to your business, but wanted you to have sort of a general awareness that there are whole bunches of insurance out there, and you will need to think about what are the risks that you're trying to protect against so that you get the right kind of insurance. Back to LBC.
So looking at all of those different types of insurance, they also fall into other categories. And I think understanding these categories can help you sort of best understand your insurance and how it applies to your situation. And it can really help you communicate with your insurer or your broker. So the first way to sort of categorize these different types of policies is by whether they are first-party insurance or third-party insurance. And what determines which is really depends on who or what is injured. So first-party insurance is for harm to you or your property. Third-party insurance is for harm to other people or other people's property that they are bringing a lawsuit or, claiming that you owe them money over. So third-party insurance can also be thought of as liability insurance or litigation insurance. And it's insurance that you buy to help you if you're facing a lawsuit or a claim from a third party. Third-party insurance may offer two separate types of coverage. So there's coverage for defense of a lawsuit against you. So that would include the money that you pay to your attorney, and other, funds that you have to spend to defend the lawsuit. And in addition to that, coverage for any settlement or judgment against you. So the policy would cover both the cost of defending the lawsuit and the amount that the claimant or the plaintiff gets at the end, as long as, of course, all of that within the limits of the policy. One thing to note here and to be aware of if you are looking at a liability policy is that some policies offer defense costs in addition to limits. And this means that the defense costs are they're not free, because obviously you're paying a premium and you get them in exchange, but it means that they don't decrease the amount of limits available for a settlement. This isn't always the case. The limits may have to cover both defense costs and whatever the settlement or judgment is, but it's something to be aware of when you're looking at a policy. And as ML mentioned, one policy might have both first party and third party insurance. And the classic example of this is a homeowner's property insurance would likely have both first party insurance to cover damage to the home and third party coverage for if someone else is injured at the house. So sort of as an example, if there's a fire at your home and you have a homeowner's policy, the first party insurance part of that coverage would cover the damage to the building that you own and, your own costs to repair it. But if there was, happened to be a FedEx delivery guy who is there, who is injured on the day of the fire, and he brings a lawsuit against you, then that lawsuit, including the defense costs and, whatever ends up getting paid to the delivery guy, that would be covered by third-party insurance. Another way to categorize insurance, and this one is a little bit trickier, is by what triggers the policy. And there's sort of two different ways that a policy will get triggered. It's either triggered by a claim made against you or by when the damage occurred. So for what are called claims made policies, the policy is triggered when a claim or a lawsuit is brought against you. For occurrence-based policies, the policy is triggered, when something goes wrong. So it's helpful, I think, to have an example here to explain sort of the difference. So let's say someone was injured on your property 3 years ago, but they waited until today to sue you. So if you had an occurrence-based policy back in 2019, that policy would apply because the person was injured in 2019. That's when the occurrence happened. If you have a claims made policy in effect today, when the actual lawsuit is brought, then that policy would apply. So this also illustrates something important, which is that more than one policy that you have in your portfolio could be triggered by one event, by one thing that has happened. Though, of course, each of the insurance companies that sold you each policy, they'll all want a different insurance company to pay. So they'll try to make each other pay rather than paying themselves.
So just to follow up on what Laura Beth was saying, the insurers, they know, of course, that you're going to have multiple different kinds of insurance policies. So sometimes they'll say, no, the other guy pays. And, if you have a cyber event, there may be coverage under a cyber policy or coverage under your D&O. And both of them may be relevant. So sometimes each of those insurers looks at the other and says, no, the other guy. But sometimes it's a question of who pays first. And they may both pay, or they may be both obligated to pay, but still argue with you about it. But there's sometimes a question of insurance company A pays the first $50,000 and insurance company B pays the next $50,000. Hopefully the numbers are smaller than that. But that's something else to think about when you're thinking about your whole portfolio of insurance, that it's really important to remember that a single event can trigger or switch on multiple policies, and that you have to figure out which pays first. So this gets a little complicated, which goes back to the next point, which is, what does my insurance policy say? That is a really good question, and we don't always know the answer to it. First of all, the insurance policy is written by the insurance company. And they basically write pretty much the same policy for all of their policyholders. And then they make special changes to that. So one way of thinking about this is if you've ever dealt with things like a will, you know, there may be a will, but then there can be codicils or what they call amendments to the will. Like, you know, the original will says my wife will inherit. And then there's a codicil to the will saying, no, we're divorced. So my second wife or my son or daughter will inherit. And so that means the lesson there is that you've got to look at the whole thing. And if you just look at the first page, you may be missing something really, 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 really important on, you know, page 52. So it's important to look at the whole document. And that said, this is hard. The amendments to the policy are called endorsements. And some of those usually are written by the insurance company as well. And so one of the basic rules of insurance coverage is if there is something that is not clear about the insurance policy, then we consider it ambiguous. And if it's ambiguous, we didn't create the ambiguity because we didn't write the policy. So if a court, or hopefully you don't ever have to get to court, but if there's an argument about what the policy means and it's fairly ambiguous, then our position is always that the policyholder wins because we didn't write that language. And if the insurer created the ambiguous language, it should be the insurance company's problem. This is a pretty powerful argument. Hopefully you won't have to use it, but that's something to remember, that we didn't write the language. It should be their problem if they wrote it. So where do we find all these pieces of the policy? The first page is the declaration page. I think we need the next slide. And this is a bit of an example here. And this is what I call a page that gives you sort of name, rank, and serial number of your insurance policy. You know, during what time period is this insurance in effect? Who's the named insured? How much this pays you? How much of a deductible you have to absorb before the insurance actually kicks in? How much premium you're paying for it. But it is absolutely critical to remember that here's this on what you would think of as the face page of the document. Any part of this can be changed and changed more than once by an endorsement. So you may say the named insured is, you know, Douglas Land Trust. But, you know, page 52 may say, well, it's them and a vendor that you've hired. So you're both insured under the policy. And you won't know that unless you look through the whole policy. So just remember that anything in the base part of the policy can be changed by an endorsement. You have to be really sure that the stuff you care about for this claim hasn't been changed. So let's talk about the architecture of the policy. We talked about the declarations page, and that's, you know, the name, the policyholder name, policyholder period, the policy number, the limits, the deductibles, the retentions, the premium amount. And again, just don't get stuck on this and make sure that you check the rest of the policy to see what might have been changed. When we talk about limits, there are two different kinds. There are actually three different kinds of limits. There is usually a per claim or per occurrence limit, which means there is a limit for this event. And then there is an aggregate limit for all events. So let's say you have an auto policy and it says we have $1 million per car accident and then a $2 million aggregate. That means you have coverage, hypothetically, for $2 million accidents. So that's something to consider. Then there is a sublimit, which is a smaller limit for things that are covered, but covered in a more limited way. And so let's say with your auto accident that you have a sublimit for the radio in the car or a sublimit for the hubcaps that is only $500. That's a sublimit. And so there are different kinds of limitations on coverage. Bits of coverage can be added or subtracted again by the endorsements. So important to remember to look at that. I think we go back to Laura for more parts of the insurance policy.
So after the declarations page, the rest of the policy parts are probably in the order that we have listed here, but they could be in a different order. And of course, as ML has said, the endorsements will probably come at the end, but might affect any other part of the policy. So starting sort of right after the declarations page, you have what are called the coverage grants. And the coverage grants say what the policy does cover. They're also sometimes known as the insuring agreement. They're probably very broad. They probably say, something about the policy covering, potentially all risks or, all property damage caused by an occurrence. But they'll be limited by the parts of the policy that come after. So usually first after the coverage grants is the definition section, which, as I'm guessing you've guessed, will define what the words in the policy mean. The policy might define a word in a way that's very different from how you would use it normally. So it's, again, really important to read these definitions and see what they say. And the definition section, might really change what the policy covers. So it's another reason why it's very important to read them. One important example that a policy will often define, what does insured or policy holder mean? And it will tell you who is or is not covered under the policy. So even if, one particular entity or person is the policy holder on the declarations page, additional people could be covered by the insurance, and that could be explained in the definition section.
Hey, Laura, can I jump in with an example?
Yeah.
So you might have a situation where you have your management, your board of directors, but you also have a property manager or something like that. And they may be added to the policy as someone that is part of the business relationship you want to extend your coverage to. So those are the kinds of things to look at where you want to put someone else on the policy and sort of change who might be insured, but that also means that multiple people can access your insurance asset. And so that's a different consideration.
And it may also change, how much your premium is depending on who is covered and to what degree. After the definitions, there's probably exclusions, and exclusions say, what is not covered. So that coverage grant might be very broad, and then the exclusions will kind of chip away at it. So you can think of the coverage grant, as a big pie, and the exclusions are just slices taken out. Conditions.
Can I jump in with another example?
Yes.
So let's say you have an auto insurance policy that says we cover damage caused by auto accidents. And so that you fit within the promise to have coverage. But then you have to look at the exclusions and see how many hurdles you have to jump over. And so it may say we cover auto accidents except where you run a red light or you run a stop sign or there are too many people in the car. And you have to get through all of those to make sure that you have your insurance coverage. So it's not as simple as saying, oh, gee, what do they promise to cover? But you've got to jump over all of those exclusions to make sure that they don't kick you out of the coverage.
And there are some sort of common exclusions that you might look at your property policies and see. A lot of insurance companies will try to exclude, damage related to lead or asbestos. As ML pointed out earlier, property policies generally exclude pollution, and you have to buy a separate policy for that. So it's sort of another thing to keep in mind, what do the exclusions carve out of coverage? And do you need coverage for that? Do you need to buy a separate policy that will, cover that hole left by that exclusion, help you get over that hurdle? As ML mentioned earlier, in order for you to get coverage, there are going to be certain things you have to do, and those are the conditions that are in the policy. You may, the conditions could require a variety of things. They may require, for example, that you promptly tell your insurer if you want them, to pay for something, or that you maintain certain kinds of records, or that you submit, a particular form in a specific way, or give them specific information. Very importantly, the conditions might include specific deadlines. You have to tell your insurer about a claim within 30 days or 60 days. If you don't meet one of those deadlines, your insurer might say that they now don't have to pay for your claim at all. So those are very important to pay attention to. And to, if you have a claim, to make sure to check on the calendar, where are those deadlines going to fall? And last, and as we've mentioned, they're extremely important, the endorsements. These change the policy. As ML said, they can change, any part of the policy. We've seen endorsements that change other endorsements that change other endorsements. So they can be confusing to read and to keep track of, but they're really very important. And it's sort of one of those you have to read all the way to the end to get to them and understand, how they've changed all the things that you've already read. So next we'll talk about how to make an insurance claim and sort of what happens next after you make a claim.
Okay, this is pretty simple. How do I know whether I should make a claim? You always think about it. I mean, if you have an asset there that's supposed to protect you against risk, and that risk happens, maybe you have insurance coverage for it. So always consider it. Doesn't necessarily mean you're going to make the claim. Maybe there is an exclusion that's a problem. For example, if there's asbestos, but you always think about it. And if you don't make the claim and don't do it on time, then the insurance company can say, not my problem. Because especially if there is a lawsuit or something against you, the insurance company wants to get in there and minimize your exposure and, of course, its exposure. And if it can't get in there and immediately start defending your claim, and the lawsuit starts to go bad, or you mishandle a response to the claimant and say, oh yeah, it's my fault, I'm really sorry. The insurance company may say, we were supposed to defend you. You were not supposed to go out and do that and agree to a claim or not defend the lawsuit or get a default judgment. And now you're on your own. So you always consider making the claim, and you always tell them absolutely as promptly as you can. You may have to do that discreetly, but that's absolutely critical. With respect to who should do that, you should be doing that. There should be somebody within the co-op who's in charge of that. And they should really coordinate the look at the insurance policies that may apply, and should be the person who's responsible as the point of contact. So this goes to another point, which is, which insurers should I be telling about my claim? As we were saying, there are times where the same bad event can actually fit in a couple of different insurance policies. You don't know which one's going to pay. You don't know which one's going to pay first, but you got to tell them. And so you will step back and notify them all. And that usually can be a short notification in writing. You don't say too much. You just say, somebody made this complaint against us. There are times where you really have to notify them quickly. So a good example is cyber. If you have a cyber insurance event, you sometimes need to get on the phone and tell them in 72 hours. And so that's something where you absolutely have to be very prompt about it. And you should know what the deadlines for notice and other things under the policy are. So being timely is absolutely critical, because if you're not, the insurance company is going to have something to say about that. And you certainly should keep your board informed of what's going on with the insurance company. I think we've sort of covered the notice. So what do you want to say about your about your event. And I should say also, it may be important to work really carefully with the brokers. The brokers can be very, very helpful in deciding what to do. So what do you put in your notice? I mean, you typically do it in writing. This may be by email. You're going to want to keep copies of every single communication you have with your insurer. So somebody's really got to be the point of contact and keep track of all this correspondence. And if you have a communication, like a conversation with the adjuster that the insurance sends out to investigate your claim, then you're going to want to keep notes of that and make sure that you have a really good record of what your discussions were with the insurance company. Sometimes your notice can be by email, but sometimes it actually also has to be in a hard copy. So you should look really carefully at what it says about what you say to the insurer when, and make sure to get that right. You should say what you know about the event, that, gee, we had hail damage. We got a ransomware attack. We have a tenant who is threatening to sue us because of a staircase that was not properly repaired. You probably don't want to go the extra step at this point to say, and you may say, we're investigating this. This is all we know at this point. You probably don't want to say, we think it's probably our fault and we're going to try to fix this and see if we can settle with them. First of all, the insurance company wants to be able to control how you resolve underlying claims. So you can't get out in front of them. You cannot spend their money without telling them. So make sure not to get out in front of the insurance company. But it also may not be your fault. And if you're perfectly appropriate in saying, we're investigating, we're looking into this. And the insurance company may want to investigate as well. But if you say we basically admitted liability and agreed to pay, the insurance company will say, well, you never told us. And we didn't get a chance to do that. And that's our job. So be very careful about how you do that. If you get a letter from a claimant saying, I fell down your staircase and it's your fault, pay me, then you need to send that to the insurance company. Similarly, if you get a lawsuit, especially if you get a lawsuit, because the insurance company probably has an obligation to appoint a lawyer for you so you don't have a judgment against you. You should ask them to appoint a lawyer, and they will, of course, do that, and it will be the lawyer of their choosing. The notice should come from the insured that is named in the insurance policy, as opposed to, your brother-in-law. I mean, make sure that it is the person who's named on the policy who has a right to the money under the policy. The two other important things, and I know I don't need to say, but we will anyhow, be honest. Don't try to shade the truth or anything like that. I would be a little minimal, but they're going to find out about the stuff anyhow, especially if you misstate it. Be honest. And if you don't know the answer, don't guess. Just tell them what you know, and you can say what you don't know, and you can say you're investigating. But this is not the time for sort of long-winded defenses, explanation, trying to blame other people. Just say, this is what the third party is claiming. We're investigating it. Tell us what you want to know, and we will try to find that out. So keep it short, sweet, honest, don't guess.
ML,
Okay.
if
Go
you
ahead.
don't mind, may I ask a question? I know folks on this call are likely, I'm recognizing some board members of the different co-ops. Have you seen this for housing co-op or similar? Is that usually a board member's duty, or is that handled by the management to do this communication? Right, it sounds very important to be very clear and to have a single point of contact. Who's the best person to make sure they know that that's their duty?
Are you asking us, or are you asking the co-ops?
I'm asking y'all what you've seen.
I don't know that there's any one right answer. I would say it should be somebody in the management of the organization, you should be keeping the board informed. But the single point of contact is really important, and transparency with the board.
Yeah, I think the role of the person is somewhat less important than sort of, the title of the person is less important than that, they're someone who's well situated to, take responsibility for all of the communications, and who are really able to stay on top of it is the key thing for whomever is sort of going to be that point of contact person.
That's a great point. So making sure that folks, whether or not they're the secretary and
Right.
responsible for communications, making sure it's the person that has the capacity, right? So maybe it's a VP, maybe it is the management company. And I think, that's a note for co-ops to check your management contracts and see if it includes coordinating with insurance.
Oh, that's a really important point. And Adam, I think your bandwidth point is really, really important, because managing insurance claims, particularly if they're big insurance claims, can be kind of a whole other job, and it takes away from your day job. So if it's a small matter and just occasionally corresponding with the insurance company, probably not a big deal as long as you keep track of all the correspondence. But if it's really going to be a bigger matter and you have to, hire a lot of vendors, keep track of expenses and things like that, somebody's got to be able to do that and do it meticulously. It helps if that person is really a detail person. Not necessarily most senior person, but really good at detail.
Great, thank you.
So to that point, again, if you're spending any money, you've got to keep track of all the documents and expenses, because if you have a deductible, you're going to need to explain to the insurance company that you spent the amount in the deductible and it's now their turn to pay. But equally, you don't want to be going to the insurance company saying, we spent money you have to pay for and we didn't tell you. So this is why really good communication with the insurer is important. Another sort of oddball question: if there's been a crime like a theft or a robbery, or somebody's embezzled money or things like that, you may need to file a police report. But again, that's probably something the board is going to want to have visibility into, and your broker should have visibility into if you get into some of these trickier conversations.
One thing to
Go ahead.
highlight, if you don't mind, ML, one thing that you can do is you can take action after something happens to, prevent additional damage.
Mm-hmm.
You don't want to, let it get worse or let it compound. But even doing that, you should be careful not to really, you don't want to repair. It's the difference between repairing damage and sort of preventing additional damage. And even doing that, you want to make sure, if you can, to talk to your insurer first. If it's an emergency situation, you can take action in that situation, but to make sure to keep records of everything. And if you're dealing with a vendor, like a contractor, you always want to ask for, the most detailed possible receipt, the most detailed invoice, the most detailed quote that they can provide, so that, so you can say to your insurer, if they ask for more information, you can say, this is the most information I was able to get from this person. This is the most, I asked for the most detailed receipt, and this is the most detailed receipt. And so that, if they do ask for information, you're more likely to have it in that situation.
Yeah, to use an example of what Laura was talking about, let's say you have a hole in your roof, and you don't do anything to cover the hole in your roof, like put a tarp over it, and then the rain comes in. Then the insurance company may say, we'll pay for the roof, but really it was kind of your fault for not doing something to keep the rain from coming in. Or you should have called us sooner so that you don't have a property full of mold. And we're not going to pay for stuff that you could have prevented even after the accident. So, or you leave your, damaged auto out in the rain and it gets rusty, that, and you don't cover it in some way to protect against it. So common sense steps to do what you can to protect against further loss are a good idea.
If I could just plug a old training, know where your water shut off valve is.
Oh, that's great.
No, that is covered in a past training, so you can go to our YouTube channel.
Okay, We'll have to look at that. So what do you do after you make the claim? You may say, or you notice the insurer and say, hey, we think we have a claim. Depending on the policy, particularly if it's a property damage policy or a crime policy, you will have to submit something that's called a proof of loss, which is give me all the paper that proves the amount you lost. And there will very often be a time limit on this, which could be very short, like 6 months or 3 months. So again, you're going to want to check your deadlines in the insurance policy. And it will probably be in the form of a letter with a bunch of documents attached, and you may have to have a responsible person signing it. You might need a notary signing it. But what you're going to do is tell the story of what happened and why you lost this amount of property or money. And you may need to explain why the insurer needs to pay for it if they don't immediately see the wisdom of paying for it as soon as you send them the proof of loss. You don't need to get ahead of yourself on coverage, but to start by presenting your loss. And that includes things that we have here on the slide, like how it happened, what other insurance you have, repair estimates, a list of an inventory of damaged property, things like that. Pictures also probably a good idea. You may need spreadsheets or schedules to quantify some of these losses, receipts, as Laura was talking about, and all of those kinds of things. So again, record keeping on this stuff is really incredibly important. So I think now we turn back to interacting with the insurers.
Yeah, so let's talk about sort of what happens next after you've made your claim and sort of what your insurance company is going to do. So after you've sent that notice letter and you maybe also have sent the proof of loss, your insurance company is going to do sort of one of three things. They're either going to accept coverage, deny coverage, or reserve rights. Regardless of which of those three things they do, they may also ask you for additional information. So one key thing to remember, if your insurance company denies your claim, then you shouldn't give them any more information unless they change their mind and accept coverage or at least reserve rights. But if your insurance company accepts coverage or they only reserve rights, and I'll explain what that means in a moment, then you can go ahead and provide information to them, sort of unless you have a lawyer who tells you to not provide that information. And as you know, as we've said, and I know we're jumping up and down on this point, but it's really important to keep a record of what you've sent to your insurer so that you can say what you sent, when you sent it, just in case. It's very important to have that information. So first, your insurer may respond to your notice letter or to your proof of loss and agree that you have coverage. So if they do this, that means that they'll agree to pay for the damage or, cover the defense costs from a lawsuit. In this instance, this is obviously the best possible outcome, but it can be a little bit more complex than this. Even if they accept coverage, they might say, oh, yes, we have to pay for the hole in your roof and for the water damage from the rain that went through the hole. But, you say that, the cost to get it fixed is going to be $8,000, but we think there's a contractor who'll do it for $5,000. So you might have to go back and forth with them about, sure, they've accepted coverage, but how much and for what? These are sort of still key questions. And it's important to remember, you can always ask your insurer to give you more information too. So if they're claiming that they can get, an insurance or they can get a contractor who will, do the repairs for $5,000 and you can't get a quote for less than $8,000, you can ask them to give you the name of a contractor, who will actually do it for that amount. So you sort of don't have to necessarily take what they say 100% at face value. You can ask them to sort of prove what they're saying in that way. So if they don't accept coverage, what they might do is send what's called a reservation of rights letter. So what a reservation of rights letter really is it's a letter that says from the insurer, okay, we're going to cover the claim for right now, but we might decide to deny coverage later. And this is probably the most likely response from your insurer. And probably what it means is that, the claim you're bringing, it's inside that coverage grant. but it might fall in one of those, exclusions. You might not be able to get over that exclusion hurdle and, keep getting coverage. So a good example, let's say you have a property policy that covers fire damage, but not if it was caused by arson. And there's a question of whether or not, this fire damage was caused by arson or not. So your insurance company is going to say, okay, for right now it's covered, but if we later find out that this was caused by arson, then we're going to deny coverage. If your insurer sends a reservation of rights letter about a lawsuit that you're asking for coverage for, then instead of the insurance company getting to choose your lawyer, you might be able to pick your own lawyer to defend your lawsuit. So you should ask your insurance company about that if they send a reservation of rights letter about a lawsuit. And if you get a reservation of rights letter, you may want to respond to your insurance company and ask them to reconsider and say, you say you might deny coverage later, but I think that's wrong, and here's why. You should reconsider your decision to reserve your rights. One really important thing to keep in mind, and it's kind of a nitpicky thing, but if the insurer says in any letter that you might have to reimburse them for defense costs, you should write back and object to that. Under no circumstances should an insurance company be getting defense costs that they've already paid back, but you have to make sure to object to that, sort of to, I guess, kind of reserve your rights on that point, to make sure to say that to them. Last and least, of course, your insurer might deny coverage. If they do that, they'll send a letter that says basically, your claim is not covered. Now, you should read a denial letter very carefully, and importantly, you should check to see if it has any errors. So, don't assume that the insurer is correct, either on what the facts of, what actually happened are, or on what the policy says. I think you'd be surprised how often an insurance company could get, sort of their own policy language incorrect. So it's important to double check what they're saying. In this instance, again, you may want to write back to your insurer and ask them to reconsider. And especially if they deny coverage and don't really tell you why, sort of just say your claim is denied without giving good and, really any reasons, then you should write back and ask them why it's denied. And of course, again, if they've denied coverage, you don't want to give this insurer any information, unless they're going to change their mind about coverage.
So just to follow up on a really important point that Laura Beth made, insurance companies make mistakes. They are not always right. So you shouldn't necessarily take it as a given that just because they say, oh, it's not covered, that they're actually right about that. So make sure that you really scrutinize that. And sometimes you'll need to consult your broker or lawyers or things like that just to make sure. But you don't necessarily have to take it at face value. So downsides of making a claim. And everybody always thinks about premiums going up and says, well, maybe we just don't tell the insurance company about it. Particularly in this day and age, not a lot stays secret for a long time. So you can enter into confidentiality agreements, and we do that stuff all the time. But, trying to hide something, I think, is never a very good practice. And the chances are the insurance company may find out about it in some way. So hiding from your insurer is something that happened, particularly if they send you an application for next year's insurance and you don't mention the car accident you had this year. They will not be happy about that, and they can go back for your next car accident and say, oh, well, we wouldn't have insured you if you told us about the first car accident. So this insurance policy is not in effect anymore. It's void. We're rescinding it. So, and this, I think, ties in with a point we've been making throughout, which is, just be straight with your insurance company. You may want to be careful as to how you communicate things, but be truthful, honest in what you say, and you don't conceal stuff that they have a right to know if they're going to insure you. You know, for example, if the lawsuit is filed in court and you don't mention it, they can find that out from the court. So it's just not really helpful to do that. So, and the way in which this often comes up is when you're applying for insurance, the new insurer or your renewal insurer may say, have you ever had any car accidents? Has anybody ever sued you? There's no upside to giving the wrong answer to that question. And I think that's really one of the points that we wanted to do that. And yes, it's possible your premium will go up, but it is equally possible if you don't tell the truth on those applications that your policy could be rescinded. So our last point on this is, well, how do we go about buying insurance? We've mentioned brokers. It is possible to buy directly from insurance. You've probably heard of your Geico agent, your State Farm agent. That agent really only sells one company's insurance. The job of the broker is to go and look at all of the insurers who might be well suited to you and make a recommendation as to, should it be Geico, should it be State Farm, should it be USAA, and give you advice on that. And they know the market in a way that we lay people don't. I mean, even insurance lawyers use brokers for their own insurance. It is also it's unusual, but although the insurance companies draft the policies and they endorse the policies, and they're responsible for whatever mistakes are in those policies, there are times you may go back to them and say, we need to add our property manager. Can you change the policy in this way? And they will sometimes do it. But the point is, you don't ask, you don't get. So you at least have to try. And your broker can help you get policy customized in the way you need it to be to wrap around the kinds of risks you face. So don't just take it at face value, just make sure that the policy does what you need it to do. And it may require some tweaking in order to make that happen. And I think that's about all I had to say for that. So any final questions or comments? Excuse me, I still have a post-COVID cough.
Yeah, so thank you. Thank you so much for this presentation. We got a couple of questions queued up in the Q&A. And then if there are other questions that folks have, we have somebody raising their hand. Would it be okay if we allowed Robert to ask a question?
For sure.
Robert, I think you can, let me see. Robert, we can hear you.
Okay. Yes.
There we go. Thank you, sir.
Thank you. Good evening. My co-op, we just received notice of a lawsuit. They just said that someone fell between our property and our next door neighbors. They told us to please submit the information to our insurance company, and they want to be in touch with our insurance company. But no details, no reports or anything. What happened? Who? We got the person's name, but we have no idea whatsoever what happened. Only the date, July 13th. And they told us we cannot, do not touch anything. They want to see our surveillance cameras. Don't touch anything, So, we're just curious what's going on. So we submitted the insurance paperwork to our attorney at this point, but I don't know if they, gave the paperwork to the insurance company or whatever. I can find that out. But we're in the air. We don't know. And they sent everybody pretty much in the block. Various buildings in the block got the same letter.
That's interesting.
Yes, it's very scary. We don't know what's going on.
Well, we can't give you advice on your situation specifically because we're not your lawyers. However, I can make a couple of general observations about these kinds of situations.
Okay.
And as a practical matter, you often get demand letters where somebody says, we're suing you for X, so you better notify your insurance because they want to know you have the resources to pay your claim. There is no upside if your third party says, tell your insurance, and you don't. So the insurance company is going to say, you have it from the plaintiff that they told you to notify. There was no question you had to do that.
Yes.
So the upside is, and it sounds like you did that.
Yes.
Second point is that with respect to communication, it's absolutely key to managing these insurance claims, but the ball is always in your court, always. So the insurance company has your money. The insurance company has rights under the policy. And, you know, whether it's your lawyer communicating with them or your broker communicating with them, it is essential to be proactive about that and follow up. And again, this goes back to a point that we were making earlier, which is someone needs to be the point of contact. And someone needs to be able to say, it's been 3 weeks since we heard anything. We need to follow up.
Okay. Okay. Yes. Appreciate that. Thank you so much. Thank you.
Very welcome.
Thank you, Robert. And for folks on the call, I know my colleagues are reaching out, making sure we have your contact information so we can follow up with the links and the information from this session. So please do include your name and contact info. And you can send it to us directly if you want to keep it private. So Kaisha, I'm going to read off one of the questions from the Q&A, but Kaisha will have you on deck. So let me see. So we had a question about their co-op requires homeowners insurance, and I think that would be either, I think homeowners insurance isn't really, they don't offer homeowners insurance for co-op, so it would be either renters insurance, and then most other things flow through the co-op. But is there are there insurance types that the co-op should require of their members, or yeah, anything along those lines?
I mean, this is your question about being required by DC law. Well, I will say this, the question is about insurance coverages required by DC law or federal. Insurance is really state regulated. And so the federal government doesn't get very involved in insurance unless it's something like terrorism that really is a national issue, or, you know, the National Flood Insurance Program, things like that. For DC law, I don't fully know the answer to that question. I mean, clearly workers' comp is something, if you have employees, that's going to be required, I think, by all 50 states and territories. So the answer to that is likely yes. And as far as the others, I don't know for sure, but the person to ask about that would be your broker, because they should know what is required in your jurisdiction.
And what would there be any other like, if it's not required by law, if they're like they have a loan with a lender, do they have those types of insurance requirements in those documents?
They might. That's actually a really excellent point, Adam, that a lot of times when you enter into a contract, you can require insurance for the counterparty. So for example, if you have a vendor, you want the person who's doing the work to be appropriately insured for if they mess up on that work. So you can require it. But also, if somebody is entering into a contract with you, they can say, you know, we want you to be insured for the following things. So, you know, that could happen with cyber or other things like that. So that it may be required by contract, or you might want to require it by contract, depending on who you're contracting with.
Such as if there's rehab being done in your building and you want to make sure the contractor and their subs do their work?
Yeah, I mean, you know, there are lots of vendors who say, you know, they're bonded and insured, and you want them to have that.
It's also something you can talk to your broker. If you have a contract that requires you to have a particular type of insurance, you can give that information to your broker so they can help you make sure that you're, you know, meeting that requirement, or that your tenants are.
Great. So let's go to Kaisha, and then Renee. I apologize if I didn't quite phrase one of your other questions well. So if you want to raise your hand, and we can have you ask it verbally, feel free to raise your hand and go from there. Kaisha, go ahead.
Thank you, Adam. Again, I would love to just thank Laura and Maria Louise for their presentation tonight, because a lot of people don't understand, having insurance in so many levels, whether it's life, and comes back to liability a lot of times. And so I'm so grateful for this presentation on so many levels. One of those things that I just wanted to, share with the attendees is that like renter's insurance in depth, be clear as to when you're taking out a policy, like what it and entails and details, as our presenter said, because like in a situation where have renter's insurance, but if you are burglarized and you only have fire, you're not insured. If you inquire flood or something like that and you just have fire, you're not insured. And some properties, based on where they're located at, and if they're flood prone, a lot of insurance companies won't insure, and it makes it hard. And so I like, again, just like I said, life insurance as well. We don't want to talk about things like that, wills and all of that nature, as it's time back into this presentation. So thank you so much, everyone. Thank you.
Yeah, Kaisha, those are great points. I'm glad you made them.
All right, Renee, you are permitted to speak.
Thank you, everyone, and I really appreciate Douglas for hosting this. I think going back to my question was, our bylaws require the homeowners in the co-op to have homeowners insurance, and I believe it's HO6 is the common term. So what I've been doing as sort of a unofficial chief risk officer for our co-op is, on an annual basis during the meeting, like to just give us a copy of the front page coverage of that shows that you have the HO6 insurance. We don't actually enumerate the type, like the amount of coverage, much like a state would require, you drive a car, you have to have, X dollar amounts in liability insurance or hospital or things like that, like what are some things that, and I believe like most mortgage, like if you have a mortgage, like usually the bank or the lender wants to make sure that they're also covered as well too. So like, but not everyone has a mortgage in our building. So how do we kind of enforce that in terms of like making sure that, an inventory that everyone has coverage?
Sort of speaking as a general matter, that record keeping of this type, I think lots of companies, even big companies, find very difficult to make sure that if they require folks to have a certain kind of insurance, that all of their vendors have the required insurance. I think the most important thing is probably something we were saying about claims, which is to make sure that there is somebody who's responsible for chasing that down and chasing down the individual homeowners to make sure they've provided that data. If there's no consequence to it, like in the bylaws, like if you don't maintain insurance, then what?
Right.
And I mean, they've breached the bylaws, you'll have to figure out what the remedy for that is. And again, not something I can advise you on.
For sure. Yeah.
But just as a practical matter, having somebody who is responsible for that documentation is a good start.
Yeah, for sure. And I think that's what the path that we're trying to be on. But at the same time, I'm going to have to wear the evil hat as a board member to for there to be a little bit more stick. Is we can impose a fine, I suppose, because it's technically a default in the homeowner's contract with the co-op. But
Right.
But at the same time, I don't want to come off too heavy-handed. It's more of a, can you guys just make sure that you have coverage? so we're still trying to balance that. And, for the fellow co-ops on the call as well, too, I really appreciate the last webinar with board accountability. It's like, we're not here as a board to try to, to crack the whip, and we do have a vested interest, but it's to protect everyone.
Right. Yeah, that makes sense.
Anyway, thank you.
And maybe I can share a little bit more context. My understanding of insurance for individual co-op members is that homeowners insurance is something that insures against the value of the unit. Because co-op members are owners of a share in a business, they do not directly own real property. They own real property as part of that business venture. And so the homeowners insurance is collectivized
Right.
under a umbrella insurance for this thing. The template docs that are given to co-ops sometimes aren't very great. Sometimes they're meant for condos.
That makes sense.
Who would use HOAs. So oftentimes what they mean is the renter's insurance, which is a little bit more of a guard against any member saying, hey, you defaulted on your duty to do whatever, and as a result there was mold and my clothes got damaged. That does is say, well, we asked you to take preventative measures. You didn't, if they don't have renter's insurance or whatever, even though they're not renters, that's often what the broker calls it. That's the thing. So I would check to see if there is something more specific about as ML was saying, a penalty associated with it, but it could be the purpose could be just to make sure people are protected for areas that the co-op doesn't cover.
And I think, again, as a general matter, the consequence is important to be aware of. But if what's necessary really is just someone facilitating access, that can also be another route that's a little bit less, I think, a little less mean hat, a little more nice hat. If someone just needs the number of a broker to sort of help connect them with the correct thing, speaking generally, that could be another pathway to take.
Yeah. Let me see. Do we have any more questions? I think we covered the larger issues identified in the Q&A. I think that might be it. So I'm gonna open this up to some questions. I'm gonna before I'll close it out. We're generally joined by some of our partners that provide this. Oh, there's the thing I was gonna say, Renee. I've seen if you don't want to be the bad guy, you should consider working with a technical assistance provider who are always interested in giving input and recommendations to co-ops that co-ops can reference when they go to the membership. So you don't have to be the one to say, we really need to raise carrying charges by 1 or 2% each year. You could have someone like Douglas CLT or our partners at Mikasa or some of the other organizations. Let me pop this up. But if you guys want to put any last Q&As into the chat while I share a little bit of information before we close out. How do I? Let me see. Okay, I see one hand going up. Sorry, I am. So our partners at Mikasa are great. They cover a lot of ground from developers to management company, and they also provide technical assistance to co-ops, similar to ourselves. You can go to their website, mikasa-inc.org, and sign up for some of their training opportunities. Another great contact and partners who connected us with Laura Beth and ML are the Neighborhood Legal Services Program. They provide corporate assistance to co-ops as part of their housing cooperative preservation initiatives. And you can, we will include their contact information in our follow-up material. Our friends at LADC, very important partners. They help coordinate. I think I heard tenant association representative on the call. So they help make sure that folks know about their rights in exercising TOPA and moving forward in the acquisition. And then we generally partner with them for handoff for post-purchase stewardship or technical assistance, as is the housing counseling services. So they are at housingetc.org. Are another very important partner who provides ongoing technical assistance. We're happy to have one of their staff on our board, so we are able to share information and coordinate well. And they have a significant kind of group of services that they provide in addition to just co-op services. So they provide some wraparound services as well for folks. And of course, we provide technical assistance ourselves. We work with both condos and co-ops, and to provide what we call stewardship services, which include individualized trainings and assistance in helping folks run their co-op, because we know if y'all are running a multi-million-dollar business in your spare time, as I love to say. We are also a membership organization, and we have a new and prospective member orientation coming up October 5th, and then our annual membership meeting and election December 15th at 6 p.m. That time may change, so do check out our website to keep up with that. And I think my colleague Dr. Carter, is dropping the links in the chat as we speak. So now that I've shared a little of the resources, we can go back to maybe one or two more questions. Renee, I see your hand up. Go for it.
Thanks. So our bylaws are fairly old. It was last updated probably 1990. The bonding requirements, our insurance for like the master insurance policy makes reference to bond ratings, which I believe is AA with Fitch, Moody's, I believe. But are there requirements under which, like, there's definitely like really less than financially solvent insurers out there, while also, but like the strong ones, the AAA plus ratings tend to be higher premiums. Does DC law or federal law, in the case of like some homeowners may have like an FHA home loan, do they require like a master policy of a certain bond rating?
ML, you're on mute.
Thank you. Honestly, I don't know the answer to that off the top of my head. It may be something that your broker will know.
Okay. All right, thank you. I'm also naturally, I have maybe a little bit of paranoia in my head. Everyone's out to get our co-op's money. So asking insurance companies like, oh, do we have to do this? I just feel like it's like a wolf wearing sheep's clothing, you know?
Yeah.
You know, and I'm trying to balance that to be compliant with the law, but also I'm gonna just be frank. I don't feel like a lot of these entities they have their financial interests at heart, it's not ours, but maybe I'm wrong.
Yeah, that sounds right.
Thanks.
Thanks, Renee. Do y'all have time for just one more question?
Yeah.
All right, Robert, go ahead, and then Robert, you're going to be it. Everybody else will have to send us their contact information, and we can follow up afterwards.
My last question is, I'm in a co-op. Is it advisable if we connected with our insurance, the building insurance, as far as seeking information on individual insurance for our shareholders? Or should the shareholders remain independent and get their own outside?
You know, honestly, that I don't know the answer to that. That sounds more like it's a governance question. So I will defer to you on, you know, bylaws and board interactions and relationship between the individual shareholders and the co-op itself. But I think that's outside my lane.
Okay, thank you.
What I've learned from you tonight, though, ML, is that you can ask the broker, and the broker might know, but they could also point you to a direction. And if you're worried about them maybe trying to get some money, ask another broker in a different org.
Sure, thank you. Thank you.
All righty. Well, I want to thank everybody for attending. ML and Laura Beth, thank you for this terrific presentation. I want to affirmatively remember our interpreters who do the difficult and invisible but not inaudible work of making sure we meet our language justice goals and include everybody. So thank you, Ryan and Laura. And thank you all for attending. Please do share your contact information so that we can circulate the information from tonight to you. And thanks everybody once again.
Thank you.
Bye all. Thanks for having us.
Thank you.
Thank you. Good
Thank you.
night.
Thank you.
Thanks all. Thank you, Laura.